Okay, welcome everyone to this live intraday strategy webinar. Today is Thursday, July 23rd. Michael Boutros here with you. We're about to get the release of the U.S. Initial jobless claims, but more importantly, retail sales figures from Canada coming in stronger than expected at 1% versus 0.6%. Initial jobless claims also 255 versus 278, but let's check out the dollar CAD real quick on the near-term price action, see if that's prompting any moves. Before we get started here, some CAD strength. Here's what dollar CAD looks like on the release. Looking to see if that median line off the low here holds or not. If we get some CAD strength on the release. Positioning was going to be tough here. The real threat was if we got a weak number. For some CAD weakness here to see long off the low and off the session lows here would have probably been an easier trade to take. Some CAD strength here. The stop would basically need to be against the highs for the session. That's a ways away from where we are now. So we'll see what kind of trade this prompts here. But good to be with you guys here this morning. Mark, Eileen, Dan, Kyle, Leon, Nino, great to be with you guys this morning. So lots to discuss. Before we get started, the dollar index has continued to move to the downside through that threshold of support that we've been watching. We'll come back to the dollar CAD here, guys, throughout the session. But here's where we start the session here as we go in for the dollar index. So relative performance for the greenback looks like this as we head into the U.S. session. You can see it's pretty split performance. Minor gains for the Aussie Swissy, but the biggest gains have actually been on the com block here with the Kiwi up 1.43%. I was just talking to Jamie about this a couple of minutes ago. Some decent gains on the Aussie up 0.33, but the Kiwi has been a very interesting move. Looks pretty good as far as the structure on the advance here on the near term as well, so we'll take a look at that. Euro up 0.63% as well. And again, the loonie has been holding that structure, seeing if we can get that median line downside break later today to mark some sort of near-term reversal, as we've been looking for that for some time now. So we'll see if that starts to pan out as we get deeper into the session and into the latter part of the week. As far as event risk is concerned, heading into the close, for the remainder of the session, it's going to be pretty quiet. Heading into the close of the week, the last thing you have is tomorrow's new home sales print for the United States. You're pretty spent on data out of Europe as well. So we're going to be looking for next week's data block to really kick things off. There's not really anything left on the docket for the remainder of the week. So there was one thing, I forgot what it was. Trade balance data, there it is, from New Zealand for the Kiwi crosses. So we've been following Aussie Kiwi has been the major or the only scalp that we've been consistently following since the start of the week. It's coming into an area of interest where we could see a turn. We've been broadly on the short side of the week, or on the short side of the trade since the start of the week. That's the first scalp that we'll cover today, but could get some sort of reaction here in the trade balance data later tonight. So keep that in mind. 1845 here in New York. Okay, let's jump right in. So before we get into the actual scalps, the dollar index real quick, we've been covering this. Again, that near-term trendline support off the lows from May has continued to be the area of focus. We haven't actually gotten a close below it yet. Today looks like it could be the day that finally gives that for us. We've continued to follow the momentum signature that's held below 60 still, and here's the downside move. Don't really get into correction territory until you get a break of this trigger off the lows from May. And you still have some downside room, here in price and to get into this median line. So you can see a scenario where this thing comes into the median line structure here in price, momentum comes into the support trigger, and even then you still wouldn't be thinking correction until you see that downside break. In the meantime, however, from a scalping standpoint, that does give us some opportunities for the downside. Here's what it looks like on the 30-minute. This was presented in one of the updates earlier in the week. Here's what the structure looks like. If we do get a break today above this, you could see this carry through right back into 12,020. But this is the structure we've been following since the start of the week, or since the high that we made here yesterday. And it's continued to hold pretty well until this move that we're seeing here today. So we'll see if this gives us an invalidation or not. Here's the weekly open. This was an objective break of the weekly opening range. It looks like we defended that yesterday, and we've continued to move off. So let me zoom this out for you real quick on the 30-minute. Again, it's the same structure that you're looking at on that daily chart. You still have a little bit more room to go to the downside before you would think larger correction here for the dollar. Momentum has been holding 60 on every stretch to the upside. We've seen multiple dips below 40. You are seeing some divergence. So again, wouldn't put it past this thing to see a little bit of a rebound, but broadly speaking, looking lower here, sub 12,000 to 20 in the near term. All right. Any questions on the dollar index before we move on? Still in murky waters here for the dollar crosses, which is why we've still been focused on some of the non-dollar crosses. But again, good to have a broader picture of what the base dollar movements are doing. Good morning, says Eileen. A wild day with the pound. So we did get that retail sales data, Eileen, earlier from the UK, which was much weaker than expected, right? Definitely threw things off for the pound earlier today. We were making a nice rally into the highs. And I guess we can take a quick look at that before we jump into the scalps. But we'll watch the opening range here. Yes, got the pips going and then lost them on the print, says Eileen. Eileen, were you aware that the print was coming out? Because it was the only event risk really, she said, oh yes, it was the only event risk really for the pound heading into the close of the week here. So here's what the British pound looks like on the daily. And it looked great. I'm with you on the topside break that we talked about yesterday. And here's what it looked like. So we were watching earlier in the week when this thing opened. We opened right below resistance. And the near-term shift was to the downside, right? We came into the median line again off of the lows that we made essentially for the year. The structure is off the lows for the year. But this one specifically is off the January low. And then we were looking for this consolidation break. The upper median line parallel off the highs, the median line off the January low, and we finally got this pop here that shifted the bias to the upside. We were then looking for last week's high and the 157 handle. The near term, we were heading right into last week's high when that release came out. And here's what the UK data looked like. It was pretty weak. We were looking for retail sales, ex-auto fuel, cork to come in at 0.4%. That saw a contraction of 0.2. Year on year, we're looking for 5.1. That came in at 4.2. Was a slight upward revision to the previous print, but nowhere near enough to offset the weakness that we saw in June. So obviously that saw a big dent. You know, the previous day we just saw some comments coming out with regards to the possibility that the BOE might need to move higher on rates because of concerns that inflation will see a real quick acceleration into the end of the year. And obviously retail sales figures like this, puts a dent in that type of outlook. So knee-jerk reaction. Eileen, a quick a point of interest that I might say, just as a word of advice and something I like to do, if you're in the money on a release like this, it might be a prudent move just to bring your stops to break even. There's no problem taking a break-even stop, even if it triggers and it comes back. I'd rather be in that situation and having lost the potential than be in a scenario where I'm actually taking a loss on a trade that was in the profit. Not only that, if it takes my trade at break even and gets a deeper correction lower, well, if you still have that same belief, Eileen, if you still have the same expectation, it just gives you a better entry lower down. So it's always, at least for me personally, it's going to be a very normal practice for me to bring in the stops to break even, especially if I'm in the money on a release like that. So wasn't expecting it so weak. I guess others weren't either. Exactly. I mean, that's why when you're trading event risk, expectations are really just what sets the deviation. That's all that matters, Eileen. I mean, what we expect is really, how am I supposed to be saying this? What we expect is this number, right? What's going to come out is completely irrelevant. The deviation between the two is what you're trading. That's what I'm trying to say. brush yourself off. No worries. You'll always have another opportunity. You live and you learn. So looking right now, you're at support at 155.88. If you do see a little bit of a break below this level, again, this was the upper median line parallel and the level that you were looking at on the daily chart here, this region. So if you break back below that, it puts the focus right back on basically the weekly opening range low again. And right back into the range that we highlighted earlier in the week. So invalidates the opening range break, and it puts us right back in sort of a sideways horizontal flat market here for the British pound. So we haven't highlighted this on the intraday charts for a couple of days, and it'll probably stay out of focus for now. But just wanted to point this out for you, Eileen. Here's what it looked like on the near-term chart. It was a pretty strong jackknife effect on that release, for sure. But even prior to that, Eileen, you didn't have much conviction and momentum. 60-40, 60-40, 60-40. It's as flat as a market as it gets. I mean, this was the momentum break right here, and the break of the Sydney-Tokyo opening range. This was the only signal you had right here. But remember, you're only looking for about 28 pips per scalp. So, you would have been well on your way into your first target, well achieved already at this point. So just make sure that we're keeping the discipline in focus at all times. Says I took the run up when it broke the Asia upper range. All right. Excuse me. Eileen says makes sense. Yep. All right. Right on. Had 40 pips on it. Eileen, see what I'm talking about? So we have to stay disciplined. If we take 28 pips and you had at least taken off a quarter of that trade, brought your stops to break even, we'd be having a different discussion right now. In any event, any questions on the pound before we move on? Let's jump into the scalps from last night. So, first things first, Sterling or Aussie Kiwi. Just want to go over a quick update on this one. It's kind of stalling out, like I was saying earlier in the session. Here's what Aussie Kiwi looks like on the daily. It's been progressing beautifully, and the overall trade setup since last week. Again, we've been following this one since the breakdown below the median line parallel here that we saw last week. Or excuse me, earlier in the month. That was a beautiful setup. You had some divergence into the highs with a trigger break. Excuse me. And then a beautiful confluence break of support here led to a nice move right into a basic trendline support off the May low. A reversal trade there as momentum held 50. Took you right back above this region. This is where we got back on the long side. That went into the yearly high day close. That held as resistance. You didn't get back on the bearish side essentially until you broke back below the 2014 high day close. That put us back on the bearish side. And then here we are again crashing below support. At this point, guys, you're still looking lower. We've brought down our bearish invalidation level from 112.78. If you remember yesterday, we brought it down yesterday we brought it down to 112.78. Last night we brought it down to yesterday's high, which was 112.30 basically. 112.29. This confluence region right here. Where the upper median line parallel converges on the basic former trendline support and now resistance. Okay, and the major key support near term that you're looking for is basically the low day close for the month, and that comes in at 110.47. That converges on the median line parallel over the next few days right around here. Okay, momentum looks pretty good. Again, you're looking for a near-term support here, which could offer a little bit of a bounce here for re-entry if you're not already on the short. If you're looking for a scalp, you could get a little bit of a bounce lower down, but broadly speaking, you're looking for maintain a bearish bias, sell rallies below that 112.20 near term. Here's what it looks like on the 30-minute. Again, also, I just want to point out, keep in mind these ridiculous slope lines, which have continued to offer clear-cut pivots in price. We just broke below that yesterday. So if anything, on an extended sort of recovery here, this is where we would look for re-entry on the shorts, and that would even take you somewhere into 111.50, 111.60. Okay, here's what it looks like, again, on the Aussie key. So Like I said, yesterday we dropped, or last night we dropped the bullish or bearish invalidation level from 112.78 down to 112.29. At this point, I'd be comfortable dropping that down into that 111.50 area I just talked about. That'll coincide with that slope line. Oops, this slope line, the monthly pivot, and it'll have to, or it'll necessitate at this point, a break of the Asia highs. So that kind of would make sense to me at this juncture to drop our near term, at least, bearish invalidation level to this level. So if we break above this, forget trying to short this thing, we'll expect a rally at that point, at least into the upper median line parallel, and we'll look for short triggers up there, if not a break higher. At this point, we're looking for, like I said, a drop into the weekly or the monthly lows. If my mouse will let me scroll here. The monthly low, or the low day close, excuse me, which is not on this chart. Sorry guys, bear with me one moment. There we go. So again, the monthly low day close at 110.47, the stretch lows at 110.16, and then actually a 100% extension, which we won't stress at this point, comes in at 109.96, but I'm not going to really stress that region. That does converge on the median line, though, which is what I wanted to highlight. Today, sort of over the next couple of hours, but you're really going to be looking for that median line tag off the highs. Any questions on the Aussie key? You're going to maintain bearish bias. At this point, like I said, we'll drop down that bearish invalidation to 111.60, 111.50. U.S. jobless claims lowest since 1973, Mark Haverman is saying. Yeah, Mark, I'm not really looking too much into that because, again, that's just one, that's just one gauge of the jobs market. You know what I mean? Jobless claims. We already talk about this a lot in the room when we're talking about and discussing the NFP print. The labor force participation rate is at its lowest level since the early 1970s. So the broader number that you're seeing with the unemployment rate, all these things are artificially inflated. Now, that does not necessarily filter into the jobless claims number. No, that might be true. 1973, that's awesome. But the overall health of the labor market as a whole is still masked by these underlying deeper-rooted problems, such as, broader labor force participation. He says, oh, I know, participation rate, full and half-time employment. Exactly, that's another major problem. All nice and good, but doesn't really mean anything. Exactly, yeah. So the Aussie Kiwi guys still looking broadly lower while we're in this formation, but still a nice setup. Still one of my favorite ones. Could get a little bit of a stall here, but looks really clean. Looks really clean. Any questions on this before we move on? Kyle saying Sterling is really taking a tumble. Okay, so it did just break that confluence support right here. All right, so I don't necessarily have any plays on this, Kyle. Like I said earlier, at this point, you basically want to be looking for the weekly low. Tag on a quick retracement off the low here. $38.2 comes in right around that area at 155.43. Okay, Let's clean this up. Give me 1 sec, guys. We're going to go right on the fly here, see if we can make something out of this here. This is no longer in play. Don't need that anymore. So you could have a measured move here. Excuse me. If this does break the lows, a measured move here would give you an objective somewhere in this range. We could take the measurement here, but I think it's too premature. Let me just take some slope lines here and see if anything does pan out. Oh, it's almost the same exact slope that we're working with. Okay. And the dollar with a nice rally to the upside too, heading into that 12,020 level. Interesting. Interesting reversal. Okay, so we'll still watch the. I'm sorry, guys. We'll still watch to see if that holds the weekly low. Watch this region of support. Remember, 55.11 is the range support that we talked about last week. If you check the levels that Jamie posted earlier in the week, guys, this is the key levels for the sterling. The range that he's checking out is basically 157 into 155.11. 155.11, I think, was the open. Was it swing low? Was the open for the week last week? And that swing low that we made the previous week on that gap that we made for the Sunday open, if you guys remember. So it was a very interesting level for price. So this is sort of the range for British pound. I'm not really interested in doing anything outside that range. So near support, 155, look for long entries. Near 157, look for short entries. Other than that, I'm not really looking to do anything outside of this until we clear. Because even the daily chart, if you look at momentum, it's just straddled that 50 region. If today turns out to be an outside reversal day, that might have larger implications. So if we close below yesterday's low, that might have larger implications. So we made it basically to test the monthly, it's not the monthly high, but we basically came to test a multi-week high, took out the opening range high, and we pushed below the low, and especially if momentum makes it below 50 on today's close, that would have a pretty strong bearish implication near term for me. Okay, and in that scenario, you'd basically be looking for targets into 155 and confluence support here at 618 into 154.60. Does that make sense? Kyle, hope that helps here on the British pound. Tom says, made some 40 pips on the Aussie Kiwi break last night. Good trade. Got out this morning before the meeting. Nice, Tommy. Well done, man. Kyle says, thanks, Mike. Hey, you're more than welcome. Well done, Tommy. Yeah, the Aussie Kiwi. It's been one of my favorite setups this entire week. That one and the other one from last night's Sterling Yen setup. I put this one on Daily FX as well. Listen, it's primed. I don't necessarily. I've had a couple of quick in and outs. It's got a larger range. A quarter of the daily TR is 50 pips, so a little bit bigger than the setups that we operate on a day in, day out basis. But the levels are exquisite on this, I think. So here's what we're looking at in the broad daily setup, and let me bring up the live charts. Okay, so you're coming into trendline resistance right off the yearly high. Cool. You made an outside reversal yesterday, an outside day reversal off of major support. This is a really good example. One of the things that drew my attention to this was the discussion that we had in the webinar yesterday. We talked about the outside daily reversals that we saw in dollar yen, the outside daily reversals that we saw in the dollar index. And how those are a little bit more compelling outside daily reversals because they're at major highs, they're at resistance, they're reversals on the upside stretch at resistance, whereas you can have outside reversals mid-trend. You can have outside reversals on the pullback, like something like this, which aren't as compelling. Okay, and this is an example of one which isn't as compelling. But why does this one stand out? Well, it stands out for a couple of different reasons. A, the location or the area of which we rebounded off of. First of all, 192.36 represent the monthly open. Oh, well, that's pretty cool. It also represents the central monthly pivot. You know me, I'm not really big on pivots, but it's there. Okay? Another thing that is pretty cool is that singular range for that outside reversal day now represents the entire weekly opening range. So now you have a well-defined, readily identifiable weekly opening range defined by one candle. And it's right above key support. So it makes the setup very, very clear. Okay, it makes the setup very, very clear. If you see a downside break below this region, it's key support anyway, it's the monthly open, it's the central pivot, it's the weekly opening range low. And if you break below this, expect to see a deeper correction here for the sterling yen, a much steeper correction. With the same respect, the opening range high, after you've made this outside key reversal or outside reversal day off of support, is at resistance. It's at trendline resistance. And if you see a topside break there, you have very clear targets. The high day close for the year, which comes in at 194.43. 194.94 represents something as well. Oh, 194.194 represents the uncovered gap, which we never actually filled, and that was from the June 29th open gap for Sunday that we never actually filled. So you have a clear-cut target there for the market to fill that gap. And then above that, you have the confluence of the yearly high and the R1 monthly pivot. You guys know I'm not big on pivots, but it's there. So the setup is exceptional here, and the levels are just very clear. And even if it's not primed for a setup right now, the levels are there for the taking. Okay, so right now what you want to be doing is playing just inside the range. Look for resistance. Why is this being so stubborn? Look for resistance near 190, just ahead of 194. Look for support just ahead of 192.40, and look for a break of that range. We're favoring the long side. You essentially would rather be buying dips. The risk is with a break below 191.90 is where I would look for the confirmed break of the short. I really wouldn't look to play the short side if this breaks just 92.36. I would really look for the confirmation break of this region. And if I zoom this out, let these lines snap for you real quick. Okay, you can see that median line off the low also comes right into that 191.89 region. And that's what's going to validate a larger correction. A break below that, you would look for support at 190.77, 190.60, this region right here. Really nice confluence of the 618 extension off the high, a 1618, excuse me, and a 38.2. More critical or more significant support, okay, comes in down here. And this is the scenario for breaks. This is not the base case scenario, but it's good to have our levels lined up. And this will be the first target. Secondary target will be down here. A little bit more of a critical support. You have the 50% retracement of the entire ascent, 189.67. But more importantly, on the daily chart, you're also looking at the December highs. And that comes in at 189.69, literally like 2 pips off. So that'll be a nice sort of critical area as well. All right, you also have a very clear-cut pending resistance trigger. So on a top side break of that trigger with a move above this region, that'll also be sort of the validation for the broader continuation of the uptrend. So a very clear-cut setup. I love it. I think it'll be a clear-cut play. I'd rather much see this thing get closer to the 192 handle here. a really nice compelling long entry or a nice long trigger down near this region would sort of be the best way to play this with a tight stop. Maybe take half off here and try to see if we can get the breakthrough. But long story short, you have a very clear-cut bullish invalidation level right at that 91.90 level. Any questions on sterling yen? And a little bit of a pullback here kind of meshes with what you're seeing in the sterling dollar and what we would like to see in the dollar yen. So here's what dollar yen's been looking like. We've kind of left it off the radar last couple of days, but still looks interesting for me. Haven't really been interested enough to actually put anything on the table, but the major range in focus still hasn't changed. 124.13, 124.35, major area of resistance. It caught the highs. We talked yesterday about the outside reversal candle that we put in right into that region. You know, we still haven't even come near those highs, and that's still the resistance in focus. And as long as that remains in play, you know, the risk for a move lower in dollar yen remains. Note that the RSI figure rather has continued to stay below 60. Which continues to suggest that the topside momentum is waning and the risk for a near-term pullback remains. That pullback would look for a target into that median line structure support. You know, as time obviously progresses, you'll be looking higher as far as the target's concerned, but you know, the risk for a pullback remains well below this. Has there been any triggers, compelling triggers to put us in the shorts? Not by any means. From a scalp basis, there has been a couple of triggers that looked interesting and that actually would have been fruitful. That was one of them. There was another one I was looking at yesterday, like this. And all of these, if you had to stop against the highs, would have eventually gotten you the 23 pips. It's just the dollar is sort of relentless, and it just wasn't giving me any comfort to try to press any of these trades. And specifically on this one, even with the break below the perceived, I'll put this in quotes, I'm doing air quotes if you can visualize, perceived opening range low for the week, it broke right back above, and then we dilly-dallied right around here. So it's a tough trade. It's a tough trade with the dollar yen. But base case scenario, you know, if we do see that correction materialize, you know, we'd be looking for that pullback into somewhere in the 123 range on the short side. It just hasn't been able to give us any play so far. Anyone here following dollar yen? Anyone trading dollar yen? Okay, so I'm going to move right on then. I also had written down a quick review of the euro dollar. By the way, there are some new names in here I'm seeing. At any times, guys, if you see any of the charts here that you would like to keep for your own references, there is a camera in the top right-hand corner of your GoToWebinar screen. You can always click on that button and take a freeze shot of any of the screens that you see in any of the webinars that we do, so you can reference these charts at your own leisure. So feel free to do that anytime during the webinars. But a quick review of the euro dollar. We are seeing a little bit of a bounce materialize off that key support that we've been eyeing since the start of the week. That key support was 108.44 into 108.18. 108.18 being the stretch lows that you made back there in May. 108.44 being a basic 618 retracement from the advance off of the yearly lows. We were following this scalp setup on the intraday charts last week. I actually put out a piece on this on Daily FX last week as well. This was the secondary target on a break of this major key. I wouldn't say it's a major key, but it was a nice trendline support off the lows there, and also was sort of a loose interpretation of the monthly opening range low there. So now we've seen a sort of materialized rebound off of that support, and interestingly enough, momentum holds 40 on the pullback here. So as hard as we try to, you know, favor the long side here as this thing was trying to break down, it looks like at the end of the day, the full-on breakdown still, you know, hasn't really hasn't really materialized yet. I just want to see if we have any parallel action here, and it looks like we do. Okay, so that's interesting. If we take, excuse me, a sliding parallel for this slope, by the way, I don't know if you guys noticed, but the slopes on these descents or all these corrections off the high in the euro have all been, virtually identical. From the correction off the May high, from the correction off the June high, and even the slope here for the correction off the July high that we're making right now have all been nearly identical in the slope of the decline. So that's pretty interesting. But you have this slope line here, if sliding parallel for the same decline that you made off last month, but also you have that 100-day moving average. Not really big on moving averages, but it's there. Again, when they confluence with major trend lines, long-term Fibonacci levels, things like this, it's foolish not to pay attention to it. So we'll keep that in view. You have a ways to go before momentum finds any meaningful resistance. So here's what it looks like on the near-term price action. That's interesting. I hadn't actually noticed that trend line there. And also one other thing I want to just tag on real quick. Bear with me one moment, guys. Is a quick retracement here. It's the 50. And the 618 comes in at a level we've been watching. Awesome. Awesome. Okay, so 110.65, which is the stretch low that you made here in May, also ends up being the 618 retracement of the decline. So here's what it looks like on the 30-minute. And the structure in the near term that looks appealing to me is this. Tag this on this morning, and it looks like it could be in play. Again, we'll leave that as a dashed structure for now because we haven't really gotten any concrete rebounds off it to signify that we're on, or to validate necessarily that we're on, 100% on the right slope here. But you'd look for near-term support right here, and on the rebound, you'd look for a target into that 110.65 area again, which we just marked up 110.65 as the 618. Nice. We put that same retracement over here. Yep, all the same levels are already represented. You see that? So we don't even need this. Right on. So those are the levels I'll be working with on the euro. Looks still pretty clean. On a downside break back below 109.55, I would kind of abandon ship. If you guys noticed, this was actually on the radar charts earlier in the week. It was kind of messy earlier in the week because if you noticed, the short side is stacked up. I kind of left these levels here on purpose. That it was stacked up. There was nothing to do as far as trying to scalp the short side into 107.95. A break below this, and you really had a nice longer-term objective target down into like 107, the handle, 106.98, 764 retracement, but more importantly, that basic trendline support off the yearly low. But just below that into 107. Or 107.95, this whole region was stacked with support. So here we are materializing with a little bit of a bounce. One other thing I do want to take into account real quick, if this is a simple correction, 100 off the low, would suffice. And you'd expect to see that find initial resistance. And that gives us a little bit more room to the upside. So be wary of that 110.30 region. watch that too. These are the immediate levels that we were watching heading to the U.S. trade session. Again, I haven't really placed any trades on this, recently, but these are the levels I'll be keeping in mind. Also keep in mind immediately, or in focus right now, you are seeing some divergence on these last two highs here. Wouldn't really stress it because it's not intra-session divergence, but it is something that puts the threat here if you do see a break below that 109.50 level. All right, so that is the euro dollar. We went over Kiwi. Did we go over Kiwi? Wow, sterling continues to break down 155.44 and counting. Okay, now approaching the weekly low. And dollar CAD with a material rebound off of that region. Gosh darn it. So there it is. Approaching the weekly highs. Remember, near-term resistance. You did have that target. We did have a target right ahead of this on the daily chart. Give me one sec. 130.76. And on the daily, $130.63 is the 2009 high. So let me just add that on there. 130.63. Oops. Okay. Nice moves. So really quick, before we wrap things up, here's the Kiwi Dollar. And this is the one with a little bit more of juice on it on the upside, more so than the Aussie, specifically on the advance that you're seeing here today. So if you guys recall, on the early start of the week, we were talking about this, and I was kind of worried on this upside. It looked very appealing, specifically on the rebound here off of the lower median line parallel. And you got the trigger break on that move, but we got stung a couple of times trying to call the low on this thing, and we didn't, you didn't want to fall into that same trap twice. So this is kind of the region we wanted to see clear. And while we did make the initial thrust and close above it, we didn't close above the median line on this move here on the 21st. On the 22nd, obviously, yesterday we closed well below it again, and here we are with another move to the upside. But the near term, that back and forth action has actually produced some pretty nice price action to the upside. So it looks like we could be making a little bit more of a clean, structured advance here. I'm looking at this. Okay, and if you take that slope into account, you can see that almost caught the lows with precision. Tag, tag, tag. This breaks it to the downside here again, so you'd start to get a little bit more concerned for a near-term pullback, but broadly speaking, you'd be looking to buy, somewhere in this zone, well above this trend line. At risk for a little bit of a pullback below this upper median line parallel, obviously, but while above the median line, broadly speaking, like I said, you'd be looking to buy. So we'll see if this thing can finally give us, like I said, some more juice to the upside, but it looks like the beginnings of what could be a little bit of a turn here for the Kiwi Dollar. Still too rich for my blood to actually try to play this on a more aggressive approach. From a scalp basis, don't have anything against trying to get on board here, but if I would be involved in this trade, I would be trading, half leverage on any type of positioning on this trade, because if you do get the move, guys, or the washout, it's likely to be something like this. It's likely to be something like this. It's likely to be something like this. It's not going to be, a slow, muttered, slow decline like this. If it's going to break down again, it's going to be a washout because there's a lot of people who are interested in trying to call the low here. So just use some caution. But I do like it. I do like it. Same thing with the Aussie dollar. Not so much to the same degree, but you are seeing the beginnings of what looks like something could be basing. I do like the Kiwi better, and that's why the Aussie Kiwi does look poised the way it does, because it does look, relatively speaking, like the Kiwi could outperform. Even if they both move down in tandem, it looks like Aussie or Kiwi losses might be lesser to an extent, or Aussie losses will be more accelerated than that of the Kiwi, which would continue to be in line with what we're looking at on Aussie Kiwi. But relatively speaking, here's what the Aussie dollar looks like on the near term as well. Looks like you got the initial breakout of a structure we've been following here from the decline off the June highs. Not the cleanest, again, but on the major turns, you've been seeing some nice pivots. This was the breakout I was looking at earlier in the week. Kind of as long as you stay above that region, kind of trying to invalidate that now. A little messy, but starting, right? Starting. After being broadly in deep oversold territory, starting. Here's your first break above 60. Dribbling below 40, trying to hold 60, trying to hold 40, you know what I mean? So it's, again, bottoming processes are not something that happens overnight. Not every bottom is going to be a V format, and they're long and sometimes arduous processes. So looks like at least the beginnings of it is underway. So we covered those, dollar index, euro, CAD. I see your question I missed earlier. Who was that? Raj, was that you? Sterling Oz. Came out of focus from earlier in the week, but let's take a look. Okay, so earlier in the week, the focus on Sterling Oz was the reversal off of this sliding parallel. Really clean as far as the daily chart is concerned, and the broader advance, off the lows that we made last year. So we came into the upper, or the sliding parallel here. Nice pullback in price. The larger correction would have been marked to the break of this longer term support trigger and momentum. And the target on the correction would have been this basic trendline support. I don't know why this is so off. Hold on one sec. Who's shifting my trend lines? Okay. Oh, right. Okay. Yeah, I remember why I stopped looking at this, because I got stopped out of this literally like 4 pips off the high here. So swing trades got stopped out at 111.10, I believe, was what Jamie was looking at. Our bearish invalidation level on the scalp charts for Sunday was this region right here. We were looking for short exposure, with this being the bearish invalidation level. There was actually a beautiful opportunity on the release of data here to get short on this release with a 63 pip ATR target, which actually worked out beautifully. On the secondary stretch here, even that gave you the 63 pips on the pullback. This breakout here, although it invalidated the short side of the trade, as we came into that 111.94 target, and I noticed that they had completed an exact 100% extension off the low, I actually took a short position against that, against my better judgment, which I typically tell you guys not to do, with a stop really tight, just a few pips against that high. And my entry was essentially just on the judgment of, hey, we've completed 100% extension. I'll try to take it against that 21st high. And, the trigger was essentially a 5-minute trigger against that high. Now, hindsight's always 20/20, and at the end of the day, it would have actually panned out long story short, I got stopped out on that spike high there. We would have inevitably got the 63 pips, but I don't have any plays on this one necessarily, Raj, for Sterling Oz at this point. You broke the upper median line parallel, and here you are rebounding off it as support. With the losses that you're seeing in this Sterling here today, it could actually still continue to pan out. Look, I mean, you're holding that upper median line parallel again here as support now. It's tough here. It's tough here. If anything, I'd be just calling this a ranging market at this point. I still do think that the risk for a broader downside move remains, but the Aussie hasn't really shown any resiliency. Like I said, the bottoming process could be underway, but you haven't really seen any evidence here that you're on the cusp of that inevitable rebound. And until you see that strength start to materialize, you're really going to need to rely on that Sterling strength, and that just isn't here yet. So I think you can get some more chop sideways for the next couple of days. Inevitably, like I said, I would like to see a steeper correction, and that steeper correction would be bought, because I do think that this one on the longer term, not only from the technical side, if you take a longer term approach, but even from the fundamental side, broadly is very supportive of the pair. So I hope that offers some clarity on this, Raj. Does that help? Let me know if you have any other specific questions on Sterling Oz here. Levels haven't changed. The only level that I added here was that 100% extension, but you don't even need that at this point. That soft target's always been there. So the update from, what date was that? Sterling Oz. 22nd. I think we originally got it on the 21st, but the latest update, oops. Yeah, 21st. All these levels are the same. No change. I'm looking at 211.44 for re-entry in the Sterling Oz. Day open and Tokyo low. 211.44 for re-entry. Yeah, that makes sense. Let me see if there's any... That's also actually the 618. Is that 211.42? Let's choke it up just a little bit. Let me ask you a question. If you do that, what would your stop be against the highs? Because the highs, if you do put your stop against the highs, that's going to require you to have a stop somewhere around 212.16, which actually opens you up just beyond 60 pips. So use a little prudence on that, Tom, as far as just where your stop would be. I'd be a little concerned on that. Unless you're looking for a steeper drop into a low beyond 60 pips. But it's tricky, guys. Watch out heading into the end of the week. I'm typically not a really good performer on Friday scalps for some reason. This is something I've noticed just over the years. Unless it's like an NFP-driven Friday, I'm typically lighting the load a lot early in the week and late in the week. My Tuesday to Thursdays are typically like my prime time scalping opportunities. That's not to say I'm not going to take a position if it's staring me in the face, but just typically I'm lighter on Friday, so just keep that in mind. As far as the Sterling Oz, look, there's great opportunities on the crosses. I would just use some caution on these wider range scalps because the implications of a wrong trade are obviously a lot larger because you're working with a much wider ATR. So just keep that in mind, guys. If you're newer to the room, if you're newer to the strategy in general, these types of scalps might not be the ones you want to dabble in first, just because, like I said, you're working with a much wider trade range here. Quick touch. So I hope that answers your questions, guys, on Sterling Oz. Tom, let me know if you have any questions on that. Raj, feel free. Let me know if you have any trade setups, guys, or questions in general you're looking at. A quick touch on some of the commodities. Gold continues to look lower. It's pointless, I guess, at this point to to look at daily charts or things like that. Here is dollar making it through 12, 20, and through the upper median line parallel. So that proposed pitchfork has no bearing at this point. Watch momentum as we head into 60 here. Could be a change in behavior, specifically if we make through yesterday's session highs. But looking at the com block, I mean, this low was made on the first day of trade this week. So really all of that, the trade that we've seen so far intra-week has been noise for gold. The low that you made was essentially right on the median line parallel off of last year's highs, and that's really what remains in focus. Below that, 1044, the 2010 stretch low, is the next soft target. The next hardline target really comes in at 974, 979. That's a 1618 extension from that swing high in 2013, and a 764 retracement off of the 2008 lows. Looking at U.S. oil, indecision's been the name of the game, but it's been a slow, moderate lower ever since. 49.80 was a target that we talked about ever since the break below 52. That's the 618 retracement from the ascent off the yearly low. We kind of didn't even pause there, which was interesting. We kind of just sailed right through it yesterday. And, beyond here, you can bring up a 764. I don't really know if it's even worth looking at. 47.80 might be a soft target, but you're essentially looking at 46.50, 46.34 as your next sort of target or next scope in view here for crude. You stay bearish below that lower median line parallel, former support, now resistance. You can see that we've already tested it as resistance last couple of days here. So all the commodities are just getting massacred. Even if you take a look at copper, I haven't really updated some of these charts in a while, so bear with me, but just to give you an idea of the drop-off that we've been seeing across the board. Here's copper, which is basically testing the 2015 low almost to the dollar that we made back in January. We probed here earlier in the month, but we're basically testing the exact stretch low that we made in January again here today. Still holding within the confines of this formation. Even some of the other exotics and the precious metals, we got to redo this one altogether, but just getting massacred. Getting a little bit more of a rebound in these precious metals. Palladium and platinum have been a little bit off the lows, but nowhere near the type of rebound that you'd expect to see after such a strong decline. Different fork in U.S. oil has a nice clean ML on U.S. oil. This is the convergence I was looking at earlier. You're looking at 129.56 low and today. On a daily chart, Mark? 4 hour. Yeah, I tend not to actually go intraday for U.S. oil. It's not something I follow closely enough. But let's take a look. And today, what do you mean today? Yesterday's low. Yeah, it's way too early to do a move like that, Mark, in my opinion. I would never put a session low or use a pitchfork on a session that's not closed yet, just as a rule of thumb. Unless I'm using an intraday like retracement where I'm literally looking to take a measurement of the move for the session. As far as formations are concerned, I'll never use a formation or draw a formation off of a session high or low that's still open. But could be. Um, could be a beautiful setup. But in general, we'll be looking for this route in commodities to find some sort of meaningful support. As far as the equity board is concerned, those have also seen some meaningful reversals as well. Here's the DAX that we saw or that we were tracking last week. S&P 500 also with a pretty strong reversal early in the week that is finding some near-term rebound here. That ML formation is loose as can be at this point, but broadly speaking, still has some room to the downside before. Look at the momentum signature also heading to the downside ahead of 60. So it's been an interesting week. Guys, I'm over on time. Wow. I will find, or rather, we will pick things up back next week on Monday on Daily FX. For the free session, guys, and Tuesday, Wednesday, and Thursday, as usual, at 8:30 Eastern here on SB. Limited on event risk to the end of the week, guys. Things should pick up as far as the event risk and the economic docket next week. But keep your eye on the dollar index. The focus will really be whether this turnaround and material shift that we're looking at here and hold below 12,037 will actually lead us to some sort of correction and a break of that near-term support structure that we're looking at in momentum. This thing has continued to stall, pull back, break the highs, stall, pull back, break the highs, but you haven't really gotten a conviction turnaround in the index yet. Also, specifically on the majors, watch that euro dollar major key support that we rebounded off of this week. This is sort of the major key support that we'll be looking at. The first indication that this thing's failure will be a break back below that upper median line parallel. For the British pound, you know, it's the weekly low. That's what the focus is going to be. If you make it through that, this is going to be considered noise, and we'll look for the recovery off of this retracement, just off of that rebound off of the low for this week. The major focus will be the two trades that are still highlighted on the intraday charts, the pullback into 110.47 for Aussie Kiwi, and obviously the sterling yen trade, which hasn't panned out yet, but we'll be looking for that weekly opening range to give way, which essentially took shape just above the monthly open, which is highlighted by that 192.36, 192 region. And we'll be looking for a reaction off that level to give us some sort of validation for that near-term bias. Guys, that wraps it up for the webinars this week. Wish you guys a great weekend, and we will pick things up next week. Have a great trading session, guys. Cheers.